another day, another all-time high for the Dow Jones Industrial Average, and US shares powered ahead last night, driven by earnings. It was Coca-Cola's result that really pushed the Dow higher. Interestingly enough, though, the S&P 500 finished exactly flat, 0.00, and the Nasdaq actually fell slightly. So once again, we saw a very different performance for each of the indices, and that had to do with the composition, the stocks that make up each of those indices. We saw that new high for the Dow based on Coca-Cola, and Amazon was also up 2.5%. Last night. GM reported well and also put out a strong forecast for the next couple of quarters. That saw its shares soar by 15% in overnight trading. And tonight we'll hear from IBM, another heavyweight in those indices, and that could drive performance once again. But the big news in overnight trading, a plunge in gold miners. The gold miners in the US are down 9% as a subsector, and the reason for that was a plunge in the gold price itself. At one stage, a spot gold was down 6.3% in a single session, and that's the biggest fall we've seen in gold since 2013. So that huge turnaround in percentage terms, that big fall, could be the beginning of a correction in the gold price. And if the gold price is correcting, the impact on Australian gold stocks could be exaggerated once again. We've remarked regularly over the last few months how the gold stocks here in Australia tend to overreact or outperform gold. When gold's rising, they tend to move higher faster. And when gold's falling, they could fall faster as well. So something to watch out for in the market today. We saw a broad sell-off yesterday, last night in those gold stocks. The reasons are not clear. There were no obvious triggers for this sell down in gold overnight. We do have a read on inflation coming up on Thursday night in the US. And of course, that will speak directly to the market expectations of a 25 basis point cut in interest rates at the end of this month and another 25 basis points cut in December. Now, those are basically locked in according to futures traders. And so anything that comes out on Thursday night that derails those expectations of interest rate cuts will speak directly to the short-term prospects for gold. And the sell down we saw in gold last night could be related to that event. The US dollar also strengthened, particularly against the yen, moving above 151. That could have also been a factor. But probably the biggest factor that made gold prices fall was the previous gains. And the steep rises that were becoming almost vertical made gold vulnerable to at least a pullback and possibly a corrective move. Now, looking at how far gold might pull back, some are asking if it's a buy the dip situation today. For mine, the steepness of the rise and the consistency over many years suggests that we could have a deeper pullback coming. Just looking at the most recent gains, if we were to do a Fibonacci analysis, the pullback level would be 39.60, so just below 4,000 US dollars for gold. But a potential pullback, 100% pullback of that recent rise would see it trading down closer to 32 or 3,300 US dollars. So something to be aware of. It's not a guarantee, of course, that we've seen a corrective move, and it might turn in today's session and start going higher again. That's certainly the way the fundamental analysis is running, with a lot of commodity analysts looking for higher levels and throwing around levels like 5,000 US dollars and 6,000 US dollars. I'm quite skeptical of that myself. I think we'd have to do a lot more work as a market before we could reach for those heights. But there's plenty of room for honest disagreement in markets. And I think in gold, the volatility increase that we saw overnight suggests that we're going to see further big moves in gold prices and in gold stocks. And of course, it's not just gold. Silver, platinum, palladium were all hit last night at the session lows. All three of those were down by more than 8%. In other words, overemphasizing the gold price fall. So precious metals likely to be in focus today, as will precious metals stocks. Even after last night's fall, though, it's important to note gold's still up 57% this year. And the impact on local gold miners, as I say, is likely to be quite severe today. But what we often see in the gold stocks listed in Australia is that traders will be forward-looking. That is, they'll take into account what's happened overnight, but then try and position themselves around what they think will happen tonight. So it's not impossible, despite that massive fall in the price of gold, we might end the session today with gold miners either flat or even slightly up, as traders could anticipate a bounce. So what happens today in Australian gold mining stocks will be a good indication of sentiment. If they do get thumped in the way the gold price was, that could lend weight to the idea we've got further downside risk in gold. If we finish up, it'll tell us that sentiment remains very positive, and this could be a dip buying opportunity. So I'll be watching those gold miners, and particularly the majors in the sector: Northern Star, Evolution, Newmont. All those giant stocks where the biggest investors will be could be a great indication of short-term gold sentiment today. One of the smaller ones I'll be watching today is on our watch list, and our 3-stock watch list today includes Genesis Minerals. Now, it's up 168% so far this year. Its shares trading around $6.60, and what's interesting about Genesis is the divergence between the fundamental sentiment around it and the technical sentiment, because fundamentally there's a lot of support still for Genesis Minerals. A number of brokers and analysts have outperforms and targets with significant upside. I believe Macquarie have an $8 target for this stock. That means another 20% gain from current levels, and a number have an outright buy rating on the stock, mainly based around the idea that its earnings will pass $300 million in the first half of 2026. So the fundamental analysis, very positive. The technical analysis, however, at least for the short term, is very negative. And Genesis has formed a 2-day island reversal. That is, it gapped higher, spent 2 days trading at those higher levels, and then gapped lower. And this sort of reversal is often an indication of extreme weakness in the short term. And based on the chart alone, I would suggest there is significant downside potential in Genesis Minerals. So it's up to you as investors to decide which way you are looking at Genesis Minerals, whether you're going to go with the fundamental analysis and see this as a buying opportunity, or the technical analysis that suggests that there could be significant further downside. Also on our watch list today is Tesla. It fell 1% tonight. It will be reporting after the close tonight. In other words, tomorrow morning, Australian time, we'll be hearing from Tesla. And its third quarter sales are expected to show a revenue increase of 5.5%. In other words, it's getting back on track. It's also likely, according to analysts, that we'll see a record deliveries announcement from Tesla. However, given its price and its current trailing PE of around 260 times, a lot of analysts have a hold rating on Tesla, and there will be a big focus on whatever it is that Tesla announced tonight. We know that they have done a good job in the past in telling the Tesla story and painting a picture of potential future earnings, so the announcements tonight could be very important to the Tesla share price performance. And the last one on our list today is a zombie stock, Beyond Meat. Now, it jumped almost 150% yesterday, but that's because it is trading at all-time lows and a mere wisp of its former share price. This stock traded initially over $200 a share. Now it's trading down in the single dollars. So although 150% looks like a strong percentage gain, in terms of the history of the share price of this stock, it's still very little. It's recovered its year-to-date loss. It has been on the slide since 2019, essentially. So hard to see this one recovering into a full business, but there are some arguing there's a short squeeze in this stock. I'd be very surprised. Market cap of $1.5 billion is not a good candidate for a short from a hedge fund's point of view. There was huge trading volume yesterday. There's been a real spike over the last few days, so it's possible something is happening in this stock. They did announce that they'd be distributing through Walmart. We still don't know what sort of acceptance we'll see from US consumers around this. The initial expectations was there would be a huge take-up of their artificial meat products on the basis of the health benefits. But since that 2019 IPO, there's been a lot of pushback on the highly processed nature of these meat substitutes, and the acceptance of that with consumers is not clear. So another one where you'll have to make up your own mind, given how low the share price is, if they have got potential to recapture the imagination of the general public, then potentially there could be significant upside in Beyond Meat. However, if their product is still on the nose, this might be a false dawn in their stock.